Hello, friends. Welcome to the Weekend Investing Daily Bite. Today is 11th of July, and we're going to talk about how gold is making a comeback after 3 months of consolidation and correction. Gold, both on US dollar terms and in INR terms, is looking bottomish, and there are reasons why we feel that it may start to go up, and we'll discuss that in the second half of this video. But first, a look at the markets today. Markets started on with a very strong note the first hour. In fact, Nifty almost went to a fresh new high at 19,500 plus. But if from 11 or maybe 10:30 onwards, there was sluggishness in the Bank Nifty and Fin Nifty stocks, causing some lethargic moves to happen in those sectors and some correction in some other sectors. But most of the broader market, mid caps, small caps, and many sectors remained very, very buoyant. In fact, made new highs. So while the Nifty remains challenged in this last 6 days, it looks extremely robust from a point of view of maintaining this uptrend and just waiting for its time, biding more time before it starts to go up again. Nifty heat map extremely, I would say, oriented or biased towards green today. You could see only some reds at HCL Tech, JSW Steel, and some losses in NTPC, marginal at best. FMCG did extremely well. Reliance moved up even further after yesterday's grand move. Consumption stocks moved up, autos moved up, some bank stocks also moved up, like HDFC Bank, and finance companies like Bajaj Finance, Bajaj Finserv, HDFC Life also did quite all right. So a mixed day, but largely and predominantly focused towards the green. Autos, as you can see on the sectoral overview, up 1.4% for the day. FMCG, consumption, public sector enterprise, pharma, all up, infra, all up more than 1%. Energy stocks, IT stocks also doing 0.5% and 0.9%. Nifty overall gaining 0.4%. And the ones that did not move today were real estate, commodities, PSU banks, and metals moving slightly down. Overall, a decent day. Waiting now for more consolidation on Nifty to move up and for Bank Nifty also to start moving up. Mid caps were all right. We are very close to an all-time high here. Small caps, in fact, made a new all-time high today. So really, a great going on those fronts. Nifty Bank is the one where some worry is, where Nifty Bank has corrected down from the top of 45 600 odd, and today also, while it made a morning comeback, it gave up all the gains towards the end, as also can be seen in the Nifty Fin Nifty index. You can see that we reached 2600 just 6 days back, and now we are back below 20,000. Morning, it was a whiplash, sort of a trap for bulls, which went on long here near 2200, but had to give back most of the gains and even more than yesterday by close on the expiry of Fin Nifty today. So coming back to gold, you very well know that there is a intense inverse correlationship of gold with the US dollar index. So whenever US dollar index is performing very well, gold will remain muted, and whenever dollar index falls, gold will really perform well. So what we are seeing here is a more than a 2 year chart here, approximately 2 years, and the dollar went from near 90 levels to 115 levels from July 22 to July 21 to October 22. And since October, the dollar index has been falling. Dollar index is essentially a index made up of uh, key currencies like euro, Japanese yen, British pound, and etc. So this is a indication that the dollar is weakening now, and also there is a sort of a HNS pattern that is playing out since October 22 till Feb 23. There was a a strong downward move in the dollar index. Since then, it has sort of been ranged, but it is now coming back and retesting this support line at 101. Once this 101 breaks down, I would expect that the dollar index will fall very rapidly towards 85-90 levels. If that were to happen, it will be a great boost to the dollar gold price, and it will also boost emerging markets. As always, whenever dollar index is dropping, other risk assets go up. This is the dollar gold chart, and you can see here very clearly that the up move started from near October. Remember from that chart, October was the peak in dollar index, and that is where the up move in gold leg has started. And recently, since May, gold has been cooling off and consolidating, and now it seems like a new leg up may start anytime here. And the same pattern is also being seen on the gold INR chart, where in October it was trading at 4,900 rupees to a gram, went up to 6,300 recently, and has cooled off to 5,800, 5,900. So this also looks like a trend line break here and starting to move up and to challenge the previous highs. And possibly, if that 101 breaks down, we are certainly going up above 6,300 in my view. So if you are a gold investor, if you are looking to allocate to gold, I think now is a decent time to look at gold. Of course, not a recommendation, but a potential sort of analysis which you can delve deeper into as to how and where you can do your trade setup. So this is all I have for today's session. Thank you so much for watching this episode. Do give us a like or subscribe to the channel. Do share this video with your friends. Do let us know in the comments what you liked about it or what you did not like about it, how you would like us to change the format or the content. We are happy to listen to you and do the requisite changes. Thank you so much. Bye. Investments in securities are subject to market risks. Read all related documents carefully before investing.